Yo, Bitcoin's down 50% since its peak in October of 2025. Many people are beginning to blame quantum computing. As crazy as that sounds, Bitcoin OG Willy Woo has officially sold all of his Bitcoin. The question is why? Well, he sent out a viral thread yesterday showing that Bitcoin has officially lost its 12-year trend against gold. And his explanation? He blames quantum computing for this breakdown. Let's do a deep dive into the thread itself and let's get to the bottom of it. No pun intended. All right, everybody. So, what is Willy Woo talking about? So, first off, he starts off the thread with a 12-year trend broken. BTC should be valued a lot higher relative to gold. By the way, he's not the only one saying this. We also have the one and only legendary Lynn Alden saying this as well. We'll play you guys the clip in just a little bit. But he says it should be, but it's not. The valuation trend broke down once quantum came into awareness. Don't read this post if you want to stay high on hopium instead of seeing things as they are. Now, what's quite interesting as well, ladies and gentlemen, is that around this time, Michael Saylor specifically, I believe in his last earnings report, Opti, he said that he was going to focus some of Strategy's resources into the whole quantum thing. So a lot of people are looking into the quantum threat or I mean, you should call it a threat. That's what it is. A quantum threat to Bitcoin as a problem, as a real problem. And potentially it's giving some investors cold feet, specifically traditional financial investors. Now, what I will say about this as well is from the research, and again, I'm a media guy. I'm not really a tech guy to, talk, at an expert level about quantum computing, but I have done a lot of research on the topic. And from my understanding is that any type of quantum related threat is still at least a decade away, perhaps even longer than that. So we're 10 years out. Think about how long 10 years is. Like, think about where you were in life 10 years ago. Think about where Bitcoin was 10 years ago. That's not to say it's not important to get ahead of it, but I do believe that the threats are a little bit overblown. And the reason I'm saying that is because quantum computing threatens all traditional encryption, not just Bitcoin. So your banking account, your favorite messaging app, anything that is sensitive that relies on encryption, quantum threatens all of that. It's not just Bitcoin in and of itself. So again, obviously cryptographers have to get ahead of this as a whole, and there is already kind of proposed solutions for all of this. So anyways, Willy Woo gets into the thick of it, and he has a chart: Bitcoin versus gold, quantum Bitcoin summit. He's pointing the arrow, and then first mention of quantum on core dev mailing list, and he's making the case that this is the reason as to why Bitcoin is not appreciating higher than gold, and it's actually broken that trend line that it's held really since 2013. That trend line has officially broken down. And I mean, if you compare this to what happened last year with Bitcoin and gold had an amazing year where it actually outperformed Bitcoin and ended the year with 60% up. Gold ended the year. I mean, Bitcoin ended the year with like 8% down. And silver did well also. But a key question here, ladies and gentlemen, is that the gold does not solve the problem that Bitcoin solves. In fact, we've tried this whole gold thing already. We've tried it. And the problem with gold is its physical characteristics. You can't really transport gold anywhere around the world for pennies on the dollar. That leads to the centralization of the custody of gold because it's very heavy. You want heavy security around it. It's not absolutely scarce. So if you compare Bitcoin with gold in terms of characteristics, Bitcoin, you know, beats gold in every single sense. However, it seems like the market is not interpreting that. Some people are saying that Bitcoin is just playing catch up. So, anyways, but this is, I think, a really good point from Willy Woo, basically pointing out that the trend has been broken. He goes on to say, likely BTC will be patched with quantum resistant signatures. This doesn't fix the issue of 4 million lost coins coming back into circulation. I'd say it's 75% chance that lost coins will not be frozen by a protocol hard fork. So the risk adjusted sale, 4 million coins, needs to be priced in. To put this in perspective, since strategy started accumulating BTC in 2020, setting a trend, only a total of 2.8 million BTC have been accumulated by all companies and spot ETFs. 4 million lost coins equals 8 years of enterprise accumulation. The market has already started pricing in the return of those lost coins ahead of time. This process completes once the Q day risk is off the table. Until then, BTC USD will price in this risk. Q day is 5 to 15 years away. That's a long time trading with a cloud over its head. Unfortunately, the next 10 years is when Bitcoin is most needed. It's the end of the long-term debt cycle. It's where macro investors and sovereigns run into hard assets like gold to shelter from global debt deleveraging. Hence, gold moons without BTC. Adam Back describes a path where vulnerable signatures such as Satoshi era PTPK and the latest Taproot addresses can be frozen via soft fork. Effectively, this implementation, if chosen, would be the path to freeze lost coins. Here is Adam Back responding to a thread, a thing going back and forth. Adam Back responds, and then insecure signature algorithm is de, how do you say that up?
Depreciable.
Wow, I'm not even going to try that. I wasn't even going to get that without your help. Via soft fork, no hard fork required. BitPlates responds with, isn't quantum computing irrelevant if the public key is never revealed, never been spent from a Bitcoin address? So your coins are safe for maybe 25 plus years until short range attacks are possible. Doesn't mean the market won't price in the risk of Satoshi's coins being hacked or dumped. Early signatures and latest Taproot signatures have their public keys in the open. Adam Back says, don't think it's realistic. Insecure signature algorithms, whether due to classical crypto analysis attacks on discrete log or cryptographically relevant quantum computers, would get deprecated. Same as other crypto schemes going back decades in internet protocols. So it's not only Willy Woo saying this as well. And again, this goes back to 2025. He says, all good. I sold all of mine. And again, this is making the announcement that he sold all his Bitcoin. I think Fred Krueger asks a very important question: to do what? Which we'll get to that in just a second. But it's not only Willy Woo mentioning the quantum stuff. It's also Lynn Alden. Here is Lynn Alden, one of the latest episodes of Bankless.
And to answer the other question, I have been, Bitcoin has underperformed my expectations in this particular cycle. I started out with conservative expectations, which was I thought the 2021 cycle, I thought we'd get to $1 trillion market cap. We did. Once we got there, I was like, yeah, I could see us hitting 100K this cycle. And we did, and we only got to like 69K. So my kind of revised bullish take wasn't quite met. Even my first one was. Then we go into the bear market. Then I basically said, I'm not really going to try to make a price target this cycle, but when pushed, I would say anything under 150K is kind of disappointing. And we only got to 126. So I would say it is kind of a second, kind of a lackluster cycle. I think treasury companies took some of the euphoria out of it. So some of the money that might otherwise have gone into, say, just cold storage Bitcoin goes into, leveraged shares of these treasury companies that are trading at X times, MNAV, which takes some of the price action out. So I think maybe without those, you could have gotten a little higher, but then they were also partially fueling the buying of it to some degree, especially MicroStrategy. So yeah, I think that overall this was a somewhat disappointing cycle. It doesn't change my long-term thesis about it, that basically a decentralized ledger is still very valuable. It's the only way to do, that we know of to do permissionless payments and portable, secure savings. And then the second part of the thesis is, well, that these things have network effects. So you pick one that you view as decentralized, secure, and is likely to win basically the liquidity war, the network effect war. Obviously, we had disagreements around, say, Bitcoin versus Ethereum and others. I've been in the Bitcoin camp, which is, okay, so a decentralized ledger is valuable. That's the largest, most liquid one. It's kind of the one that's kind of geared towards simplicity and kind of maximal decentralization. And so the thesis is that would continue holding up, and also has bullish on stablecoins along the way as well, even though they run on largely other rails. And I would say in this cycle, Bitcoin is still, dominant cryptocurrency. So 17 years in, I think that part of the thesis continues to hold up well. People have their views on quantum and other factors that contribute over the next 5, 10, 15 years. But so far, I'd say that part of the thesis is on track. And the part that's going slower than expected is just the demand for any decentralized ledger, which is, I still think it's valuable, but I do think the world's kind of maybe a little slower to recognize its use.
So back to, some other people's opinions on this as well, right? Whether you guys like it or not, the quantum fear is a big one in the eyes of investors and could be playing a role as to why gold has been outperforming Bitcoin for the last year or so. Now, here's some more takes on the quantum related side of things. Here is Tama B says a lot of quantum FUD. By the way, the quantum FUD has been around for a long time. Ever since I've been in this industry, you've been hearing about the quantum FUD. So really, I remember since 2017, 2018, you were hearing about the quantum FUD. And it's been almost a decade later, and you're still hearing about the quantum FUD. I think the only difference between that era in time and now is there's a lot more money on the line. There are publicly traded companies. There are sovereign wealth funds. Back then, we were just we were a bunch of plebs, dollar cost averaging $100 a day, right? If you are a sovereign wealth fund or if you're a nation state, you obviously don't want to put your country's wealth into something that could potentially be compromised by quantum computing, which is why I believe this quantum narrative holds a lot more weight now than it did back then when we were just a bunch of degens in the trenches of Bitcoin/crypto Twitter. Anywho, so it goes on to say, what if 4 million lost coins, say 75% recoverable? Whoever breaks it knows dumping crashes price. So they sell OTC to the US government at a discount, 50%. Price doesn't move or even goes up. Is that a feasibility? Wicked, who's been pretty well known in the space, he's been around here a long time. He says it won't be 4 million coins. Most exposed coins will be moved as soon as the threat emerges, and they'll be lucky if they get 2 million. Tone Vase responds, also, I don't understand why everyone is expecting all these keys to be broken on the same day. Say quantum computer did crack one of Satoshi's old keys, it would probably have taken 5+ years of attacking one wallet for 50 BTC. The worst case scenario is another few years before 50 more coins get cracked. Maybe by 2050, we will be at one wallet per day possibility. Parentheses, and even that is probably a crazy 10x overestimate of quantum risk. So I personally, my own perception of this based on research is I think that these threats are overblown. Here are Grobel's takes on this, and he says, in approximately 18 months, we will discover how quantum computers actually require Bitcoin mining's massive hash rate as entropy to entangle atoms, much like how the carbon emissions FUD ended up with mining as a technique to reduce global CO2. This will mean no one will dare attack Bitcoin and effectively destroy their QC. The most entertaining outcome is the most likely. I really like that take, but I don't know. Who knows? Anyways, here is kind of like the Twitter news ag. I think an AI does a summary of this. And it says Bitcoin plunges to decade low against gold amid quantum fears. On chain analyst Willy Woo shares a chart showing Bitcoin trading at historic lows against gold, around 14 to 18 ounces per BTC, as gold surges on safe haven demand while Bitcoin lags. Fears center around, or better said, on quantum computers potentially unlocking 4 million dormant BTC from pre 2011 wallets, though experts say such machines are years away. Post 2030, voices like Ray Dalio push gold amid global tension and US debt woes, while Bitcoin advocates like Michael Saylor counter that it offers no counterparty safety, highlighting a deepening divide on what counts as the real store of value. And I do want to refer to Ray Dalio's thread on this because he recently just dropped it. And it's actually a pretty good article or thread or whatever. It's an article, really. And he makes a claim. It's official. The world order has broken down, and it's funny, you see Sailor here in the comments responding basically that, hey, if you believe the world order is breaking down, own the asset with no counterparty, Bitcoin. You got Simon Dixon in here. And this is basically the theory of Ray Dalio. The theory of Ray Dalio, if you guys have seen his YouTube videos or read his book, is that empires last in kind of 250-year cycles. And basically, the last 250 years, we've seen the rise of the United States, which he makes the case is on the decline. Before that, the British Empire. Before that, the Dutch. And he's making the case, Ray Dalio makes the case that it's actually China that that is taking the place of the United States. And in between these, overlapping empirical cycles, so to speak, there's actually tension, and actually the global order breaks down. And this is kind of where we are in the movie. This is the whole basis of his book. This is the whole basis of his theory. And this is the explanation as to why gold is going up. Now, from a Bitcoiner's perspective, going back to Willy Woo's case, listen, guys, at the end of the day, if you put ideologies aside, I'm a free market maxi. I truly believe in the free market. I think the market is the ultimate source of truth. I think you can have opinions, you can have ideas, but ultimately the market is going to get to determine what is the truth, what is valuable, at a much higher degree of accuracy than any one person or any one opinion. That's the power of markets. That's how I feel about markets. And ultimately the market is speaking. The market is making its voice heard. And this kind of reminds me of um the early days of stable coins. The original thesis was that Bitcoin was going to be the currency in developing markets because developing markets had relatively unstable fiat currencies, and because they had relatively unstable fiat currencies, they would need a non-sovereign decentralized alternative that their local governments couldn't shut down. Now, here's the thing. That theory ended up playing out, but it wasn't Bitcoin that was the currency that is being used the most in developing markets. It ended up becoming Tether. It ended up becoming stablecoin. So people did want an alternative to local currencies, but it wasn't Bitcoin. It was actually Tether that took that spot. And the reason for that is because Bitcoin was too volatile and most people don't have disposable income. Bitcoin, I think, is the best savings the world has ever seen. But if you're living paycheck to paycheck and Bitcoin's volatility purchasing power, most people that are living paycheck to paycheck are not interested in that. What they're interested in is being able to put food on the table. I think this is where stablecoins solve that problem. That the reason I'm bringing up that example is because that's an example of the free market speaking. That's an example of the free market getting to decide, listen, like, yeah, your Bitcoin thesis was great. It was fine. However, that's not actually what the market wanted. The market actually wanted something more stable, more stable. It actually wanted a US dollar alternative or a US dollar equivalent that people can transact with in these countries. And the market has shown that. Now, the market is showing right now, whether people like it or not, that that uh, they value gold for whatever fucking reason. Excuse my language. Like it for me, from my perspective, I do like physical gold. Um, but there's a limitation to physical gold, and that limitation is its fair physical characteristics. Also, if you have like $1 million worth of gold and you go try to sell that, go try to sell that, you're going to get like 20-30% below spot price if you try to sell that all in one go. You can't transport it effectively. Let's say you have to flee your jurisdiction because of a government persecution. Good luck crossing the border with that gold. This is where Bitcoin solves the problem. This is why Michael Saylor is talking about no counterparty risk. It does solve that problem. Like whether you like it, that's just the reality of it. So there is a solution to this quantum perceived threat. I don't see quantum computing being an issue for the foreseeable future. But I think Willy Woo does have a point here in terms of this could actually be something that the markets are perceiving as a potential, a potential threat to Bitcoin. Not necessarily the Bitcoin protocol as a whole, not necessarily the value proposition of Bitcoin, but the market is basically saying, look, like these 4 million coins might be dumped on the market in the next 10 years or so, 10, 15, 20 years. That could be a thing. And if you're trading or if you're trying to put, value into Bitcoin, you're essentially pricing that in. And that's the case that he's making. Simultaneously, though, we have to be honest and we have to be true about incentives, because incentives ultimately rule the world. I think it was the late Charlie Munger that said a very famous quote. He said, "If you want to see the outcome, show me the incentives." Um, Ultimately, Willy Woo sold all his Bitcoin. So, what is Willy Woo incentivize? What would make Willy Woo's day if the price of Bitcoin went down? Why? Because he could buy more Bitcoin. So, it we could just be writing a situation where gold outperformed. I don't think anyone could have told you in January of 2025 that gold would have outperformed Bitcoin. But you could be making a case that this is an opportunist post, right? It's kind of like hindsight 2020. It's like you're looking back and you're like, oh, it was obvious this was going to happen. And let me craft my post based on the current market sentiment, right? You could make a very good argument against that. I mean, for that, right? My personal take on this is I don't think quantum computing is a threat to your Bitcoin or to Bitcoin in general for at least a decade. I think even more than that, to be honest. I think theoretically it could be a threat, but I don't think for the foreseeable future. But that's not to say that investors are not spooked. Simultaneously, me and Opti did get a very interesting text message late last night.
I think we'll talk about it tomorrow.
Okay, we'll talk about it tomorrow. But basically, the TLDR is this: some very powerful, influential, politically connected people are continuing to buy massive amounts of Bitcoin. So if, they perceived quantum computing to be the threat that it was, then they wouldn't be doing this. It's also not those people that we're not going to talk about today, but it's also the country of El Salvador. The country of El Salvador continues to buy a Bitcoin a day. And that hasn't stopped. So yeah, I mean, that's kind of the TLDR right now. I think that this is just an excuse as to why Bitcoin isn't going up. I think this is kind of like a justification. I think this is like Monday morning quarterbacking. I think this is just like not diagnosing the problem, like people just kind of confused. If I were to, and so far I've been right about this. If I were to look at the previous cycle, I do agree with Len. I do agree with a lot of other notable people in the space that it was a disappointing cycle for without a shadow of a doubt. I think expectations are running high, but I do remember that in the beginning of 2025, when we were in the euphoria phase, I do remember when Bitcoin was making all-time highs versus gold. I do remember telling Opti uh something, and I said, what worries me about this year is that everyone is treating this as a sure bet that Bitcoin is going to make all-time highs at the end of the year, and markets don't behave that way. Like if everyone thinks that Bitcoin is going to make all-time highs, that's not the way markets work. Bitcoin isn't going to make all-time highs, right? Markets do the exact opposite of what the consensus believes and thinks. So yeah, I mean, quite interesting theory here on Willy Woo. Opti, I do want to get your take on all this, man, because the quantum computing argument or FUD or whatever threat, dude, this has been around since you and I have both got into this industry. This is not something old or new. But most importantly, man, like, I think that this is just a justification or trying of like a coping mechanism as to why Bitcoin didn't perform the way that it did in the previous year. That's what I see. In my honest opinion, I'd love to hear your thoughts.
Yeah, no, I'm totally on board with what you said. I personally think that this is cope. We've seen the reason we're really talking about it is because we are seeing it's not just Willy Woo. We're seeing a lot of people talk about the quantum concerns here. And obviously, as a Bitcoiner, it does kind of perk your attention at first. You're like, oh, wow, maybe I should pay attention to this. Is there some advancements in quantum computing that I wasn't aware of in the last couple of days? Because we do know technology is moving very fast. But it does seem like cope. Now, the chart that Willy Woo posted, it is somewhat convincing. You look at it, it's like, okay, we had a 12-year downtrend, or rather, gold had a 12-year downtrend against Bitcoin, and you cherry point some data points here. Yeah, you go just full screen this chart, and you look at that chart. Just click the picture so they could see it better. And yeah, it is. Bitcoin did lose this 12 years downtrend, or rather, the 12-year downtrend of gold price in Bitcoin. It did break out. Now, these data points do make it seem like, oh, wow, the first time, also the framing, the first time quantum's been mentioned in the Bitcoin core developer mailing list, and then we have the Quantum Bitcoin Summit. To me, it really, I think, is a lot of cope. And it's like we said, if you look at Willy Woo right now, he's been in Bitcoin for a long time. He is a Bitcoiner, but he did sell his Bitcoin. What was that? July of last year. And that was before Bitcoin even hit an all-time high. And when he sold his Bitcoin, what he officially said wasn't like, I'm concerned about quantum. Now he's kind of saying, I'm concerned about quantum, and I'm so right and vindicated for selling my Bitcoin. But we all know he was basically saying, hey, I think I can make better gains if I put my Bitcoin in some kind of, either digital asset treasury company or Bitcoin startup. So his original reasoning for selling his Bitcoin wasn't necessarily quantum FUD. Now we're seeing, because the quantum FUD is becoming kind of one of the hot button topics right now, we are seeing rumors that apparently, some Wall Street investors aren't buying Bitcoin, or they're selling the Bitcoin because of the quantum FUD. I think this is all cope, because when you look at the people that are really parading this quantum FUD idea, most of them have quantum computing investments that in their portfolio. So again, you got to look at the incentives. Now, the reason we probably are talking about this, maybe it is a bottom signal like the chat is saying, but there are a lot of people talking about this, whether it's on the corporate press. I have gotten some text messages from friends about like, what about the quantum computing? And I'm like, bro, that's like not really a concern. It's obviously a concern, but it's not just a Bitcoin concern. One, it's not going to happen tomorrow. It's not going to happen next year. And two, if quantum computing does get to this level where it is actually a fear, we have way bigger problems than people cracking Bitcoin wallets. It's like all of the modern world is cut. And so you're looking at all the FUD, and it does make you feel, or rather, it does make it seem like these are just bottom signals and people coping for what is the new reason for the Bitcoin price dropping. You know, I may not totally agree with Nico, but I think we know what happened with the price. The 4-year cycle was kind of intact still, you know? So I think the fact that people are parading this idea out like, oh, looking backwards in hindsight, it's so easy to say, hey, the quantum FUD is the reason for Bitcoin dropping. I think it's complete cope. I don't think this is the issue for why Bitcoin fell. Yes, it is starting to come up in the conversation, but it's not a new conversation. I think what it is kind of one of those things that we've been talking about for a long time. It's this eternal September moment where new people are coming into the space. It's the, I just found Bitcoin, I'm here to fix it. You know, I'm new to Bitcoin, I'm here to fix it. And now this is becoming the cope, the FUD that everyone wants to talk about. I don't think this is the reason for Bitcoin dropping. I don't think this is even really a concern for Bitcoin, just generally for itself, or rather specifically for itself. It is generally a concern across the board for everything. And as we've seen, the Bitcoiners have been, or not necessarily us because we're not developers, but Bitcoin developers have been talking about quantum computing for a long time before it was really a trendy conversation. So it's not going to be one of these things where Bitcoiners get blindsided because of quantum computing. I think, as a lot of people kind of mention, I think Bitcoiners are going to probably be more prepared for this when it is an actual threat, and it's something that's coming down the pipeline a few years from now. But there are people now currently making the case that if we don't figure this out now, it's over. And I think this is part of what Nico said a minute ago. I don't think the quantum FUD is the specific reason for Bitcoin to crash, but I do think that people parading this FUD and this narrative that, oh, this is why Bitcoin crashed, I think it is starting to build on the sentiment, or the negative bearish sentiment on Bitcoin. And we're just seeing, as I mentioned a couple of days ago, we're seeing all of the FUD get paraded out right now as Bitcoin is in this 60K range, or 60 to 70K range. And it does make it seem like these are really good classic bottom signals. When all the FUD gets paraded, that's usually when people are taking their victory laps and saying, oh, Bitcoin's over. I told you it was over. Like we just saw The Atlantic did a hit piece on Bitcoin. It was called like crypto's success is its failure, or something like that. And so you're seeing all the FUD happen. I don't think this is really the concern that most people think it is. I think Bitcoin fell just because of liquidity and macro factors and people thinking of the 4-year cycle. And then on top of that, add the different FUD narratives. But again, always focus on incentives. And if you're on Twitter like we are, most of the people that are parading this FUD around have basically quantum computing bags. They're like, we're going to solve this. We're going to FUD it. So it makes it like it's a big issue. And hey, guess what? My portfolio is totally aligned with quantum computing benefiting Bitcoin, or, me benefiting off quantum computing being solved. So I don't think this is a concern. I think it really is bottom signals. Like we're seeing a lot of people parade the FUD from every corner. And that's just kind of stuff you see at the bottom of bear market. So hopefully this is a classic bear market signal.
I mean, dude, look, if you've been in the space for a while now, yeah, I noticed that too. I think we just got to change the frame. If you've been in this, just change the frame. If you've been in this space for long enough, you've heard the quantum FUD or the quantum narrative for you've heard it 1,000 times. It's not something new to you. You hear it every single year. In fact, not only do you hear it every single year, you hear it at the bottom of every single bear market. This quantum FUD, or this quantum talk, has continuously been brought up for the last 10 years that I've been in this space. It never fails. It's always there. It's always being talked about. So, again, does this surprise me at all whatsoever? No, it doesn't surprise me. It doesn't surprise me that it's being brought up. This is kind of bottom signals. This is what I'm feeling. This is bottom signals. This is cope. This is like, oh my God, the reason all of this is happening is because of the quantum fears and the quantum FUD, and quantum's going to crack all of Satoshi's private keys, and all that Bitcoin just going to be sold onto the market, and this and that. Like I've heard this so many times before. I just think that this cycle is a little bit different, and I think it's a little bit different because of the players who are involved. And I also think that for the first time in a long time, really since like 2018, I feel uncertainty back in the market again. We haven't had this much uncertainty in Bitcoin in a very long time, Opti. Before, like, people can't, as time progresses, more and more people are basically losing hope that Bitcoin can reach all-time highs. Like, people are basically losing hope that Bitcoin can reach 200K, 300K, 400K, 500K. And that uncertainty is what creates the perfect conditions for the next move up when it inevitably comes, because the core thesis behind Bitcoin hasn't changed. The characteristics of Bitcoin hasn't changed. If you take a look at the hash rate, it continues to make all-time highs. So again, are you a believer? Or do you have conviction in your holdings? If the answer is yes, then hold on, DCA, dollar cost average, take advantage of these low prices and accumulate your stack. And we could go lower. Take advantage of the prices going lower if and when they go lower, right? But I love the fact that uncertainty is back, because we had a 3-year high of complete certainty that Bitcoin was going to go to the moon and beyond. And now reality is coming back. It's smacking everybody in the face. It's saying, wake the fuck up, sunshine. And I think that's a good thing. And I think that's not a bad thing. I think it humbles the F out of you as a Bitcoiner. It makes you feel the pain. It makes you feel why you're here. And it reminds you why we're here. And I think a lot of people have forgotten, the reason as to why we're in Bitcoin. And the reason we are in Bitcoin is, again, to escape this rat race, to escape the traditional financial system. It's to escape, this fiat nihilistic mindset. This is what Bitcoin is all about. It's about individuals reclaiming back their financial sovereignty by buying Bitcoin, earning Bitcoin, mining Bitcoin, and taking that Bitcoin into self-custody. That's why we're here. This previous cycle, what concerned me, Opti, is the fact that people forgot the core reason, the core logic as to why we became Bitcoiners in the first place. It was this over-financialized cycle. It was the treasury companies. It was as much of a fan as I am of Saylor, it was strategy this, strategy that, treasury company this, treasury company that. That was the main thesis of this cycle. It wasn't altcoins as it was in 2021. This cycle was the cycle of treasury companies, right? And I think a lot of the potential, and Lynn Alden said it in her bit, I think a lot of the potential parabola that would have happened normally, I think a lot of that cash went into treasury companies. And I think it was actually Mauricio, the co-founder of Ledin, that pointed this out to us. We did have a parabola. It just didn't happen in spot Bitcoin. But if you look at strategy had a textbook parabola. It went from like what, 10, 15, no, it went from like $15, $20 a share to $500 a share. It went crazy. It went bananas. We had a parabola in strategy. We just didn't have a parabola in spot Bitcoin. And I think that is what has caught a lot of people by surprise. But this is what markets do. And I think a lot of people have forgotten that, right? So again, we're heading into the unknown. It's like Christopher Columbus. Again, you know, the whole point of him originally sailing, I saw some SNL skits on this, is hilarious, like with Bad Bunny and stuff. But the whole reason of him, like, you know, originally sailing was, you know, he wanted to get to China. Like Spain thought that they would be able to get to China in a more efficient manner, and they ran into the Americas in the process, right? But there was an age of discovery, there's an age of uncertainty. And this is where we are in Bitcoin right now, is we are in uncertain territory. We're in kind of this discovery territory. And I think that's a positive for Bitcoin. I think it's going to create more conviction. It's going to shake your beliefs, and it's going to ask you why you're here. You know, do you still believe in Bitcoin? Do you still believe in the future appeal of Bitcoin? Do you still believe in the future performance of Bitcoin? And when that gets exhausted, when the tourists leave, when the tourists, you know, say, listen, I've had enough of this. Bitcoin's time to shine is over. The Ponzi truly is over. It's done. It's, you know, pack it up, go home. I'm going to be able to find, quote unquote, more alpha in different things. Only then is when we'll hit bottom. And only then is when Bitcoin will start to pick up again. And only then is when we'll start making all-time highs, when most people have lost the faith, because that's usually how the bear markets play out. We have just forgotten that because, again, we've been riding a high for the last 3 years of Bitcoin's history. And we had a generational run. We had an epic run. We went from $16,000 to $126,000. That's an incredible return. That's an incredible run. It's just, guys, things are changing, right? Things are changing. And again, these are a lot of the coping and a lot of the narratives that people are using to justify as to why Bitcoin isn't performing the way that it has. So, you know, 2026 is the year to learn fundamentals, to learn why you're here, to learn about Bitcoin, the characteristics of Bitcoin. And historically speaking, this happens to be one of the best, most opportune times to buy cheap Bitcoin. So take advantage of it. Anyways, guys, we're going to be right back in just a bit. We're going to have an incredible show, tons of stuff to cover. We're going to be right back in just a bit. Today's episode is brought to you by Bitcoin Well Infinite. If you're a serious Bitcoin buyer, you've probably hit the same wall. Most platforms make you give up custody just to play by the rules. Bitcoin Well Infinite fixes that. They're North America's only publicly traded, non-custodial OTC desk listed on the TSX Venture Exchange, which means transparent operations and zero counterparty risk.
You buy Bitcoin, you take immediate control, period. For trades over $50,000, you get a dedicated executive Bitcoin advisor, competitive spread starting at 1%, and immediate delivery straight to your own wallet. No custody risk, no withdrawal fees, just institutional grade execution with full asset control. If you want to buy Bitcoin the right way, book a free consultation at bitcoinwell.com/OTC or email infinite@bitcoinwell.com.
I want to give a shout out to our partner, StampSeed. Is your Bitcoin in cold storage really secure? Are your seed phrases really secure? StampSeed's do-it-yourself kit has everything you'll need for you to hammer your seed words into commercial-grade titanium plates instead of just writing them down on paper. Paper is fragile. Titanium plates are strong. Your words are actually stamped into the titanium plate with this hammer and these letter stamping tools. Once the words are in, they aren't going anywhere. No risk of the plate breaking apart and pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They are also crush-proof, waterproof, non-corrosive, and time-proof. And now you can customize your titanium seed plates. You can upload your design or logo, and they will laser engrave it on the back of your seed plate, the opposite side of where the words are. Stamp your seed on Stamp Seed and use promo code SIMPLY to get 15% off anything on the stampseed.com store. All right, everybody, we are back. I do want to share the Clark Moody dashboard. At the time of recording, the Bitcoin price is $67,750. Again, it's like almost 50% drawdown from all-time high. Sats per dollar 1,476. Block height 937,115. Realized monetary inflation 0.83%. Market cap 1.35 trillion. Bitcoin versus gold market cap 4.53%. Percentage issued 95.19%. In the grand scheme of things, we are just getting the party started. All right, everybody, let's move on to the next bit. I do want to share this video. Let's talk about the Clarity Act. So again, you guys know how I personally feel about the Clarity Act. I've been talking about it. It is a big deal for the Trump administration. We played you guys a clip of Scott Besson on CNBC not too long ago, talking about the importance of passing the Clarity Act. I think it was on the Friday show of last week. And I told you guys, I said, listen, like, Brian Armstrong and Coinbase don't want to pass it. They don't want to support it because the big banks don't want the Clarity Act. They're essentially putting it in the Clarity Act that exchanges aren't allowed to give rewards for people leaving their deposits on the exchange, which again acts like as a form of income. I made the case that it's unfortunate that this is happening because it's like here you have the crypto industry kind of holding back the Bitcoin industry. And I said, like, listen, like for better or for worse, Coinbase is the largest player in the game. And, they are the biggest and loudest lobbying voice in DC, for better or for worse. So, and unfortunately how these laws get signed into, how they get put into law is that a lot of these things are included in one big giant package. And, things can stall because one thing in that giant package, it gets disagreed upon. And that seems to be the case here. So, according to Polymarket, again, kind of a lot of money on the line on Polymarket. The markets do believe that it will get passed. They're giving it a 63% chance at the moment. It's definitely gotten a lot higher than where it was in January of 2022, January 22nd, where the chance went all the way down to 39%. So it seems like it's heading in the right direction. Here is the CFTC chair, and he's making the case that the market structure bill is on the cusp of getting signed into law. So I'm going to play you guys the clip. And also, he will be speaking at the Bitcoin conference in Vegas. You definitely want to get your tickets today. And again, if you use promo code SIMPLY, you will get a discount to Bitcoin 2026 in Vegas. So I'm going to play you guys this clip. Then Opti and I are going to talk about it. We're going to be right back in just a bit.
Well, thanks to the president's leadership, we are on the cusp of getting Clarity enacted into law. The regulation by enforcement's over, the Genius Act signed into law, and we've really turned a new page. And I would say the United States today is the crypto capital of the world. But we need to make sure that it stays that way. And this Clarity Act is really critical. The president has been clear that we need to get something enacted into law because we want to future-proof our statutory framework for crypto. We can't allow for Gary Gensler 2.0 to come in and tear it all up. And so this legislation is critical. It's all hands on deck, and we're making a push to get it done. There are some little wrinkles around the point you mentioned on the yield front, which we thought some of this was settled with the Genius Act, but it's coming back to the bear. But we're going to get this thing across the line, and we're going to make sure the United States is and remains the crypto capital of the world.
All right, everybody. So again, kind of political grandstanding and positioning, and obviously we know the Trump White House wants to get it passed. But ultimately, what it comes down to is Coinbase going to be okay with the terms? I think it is very uncompetitive of the big banks to basically, instead of competing with the new innovators. I think it is very uncompetitive that the big banks are trying to use the heavy hand of the state in order to stifle innovation and competition for the benefit of the consumer. So I do agree with Coinbase on that front. But as a Bitcoiner, excuse my language, what the fuck do I care about any of that, right? Like, I care about one thing and one thing only: is if the Clarity Act includes protections for self custody. That's really what I care of as a Bitcoiner. And then Opti's dream is for essentially, no cap gains on Bitcoin, right? And that's
not just my dream. That's all Bitcoiners' dreams. Come on,
that's like really like what we fundamentally care about. Like, we don't really care about staking or DeFi or interest on crypto deposits. Like, sorry guys, you're tuned into the wrong show if that's what you're trying to get. If that's the type of news you're trying to get out of today's show, you're tuned into the wrong show. This is Simply Bitcoin after all. But I care about the protections for self custody, and there is supposed to be an exemption of some sort. I don't think that's included in the current bill. That essentially would exempt a certain amount of Bitcoin so that you could actually use Bitcoin as money without any tax implications, right? I know Jack Dorsey was pushing hard for that. So eventually, I would love no cap gains at all on Bitcoin. But I don't think that's included in the bill, and I think we're far away from that. But anywho, I want to get your take, Opti, because you did have some descriptions of the gentleman.
I'm not saying that. Yeah, I'll say a little effeminate. A guy's a little too effeminate for me.
I think he's great, and I think he's a vocal supporter of us, within government. And I did want to. His quote is interesting here. We want to future-proof our strategy framework for crypto. We can't allow for Gary Gensler to come in and tear it up. We're going to get this across the line. The thing is, like, what across the line? And another thing too is, like, and this was kind of like what Coinbase was talking about. Coinbase was making the case basically, like, look, like, as the bill currently stands, this is worse than the status quo, right? So it's like, why are we going to pass a bill to pass a bill if the bill in itself and the law that's in the bill is more disadvantageous to Bitcoiners than no bill at all? So yeah, I mean, we'll have more coverage on this, ladies and gentlemen, as this develops. Again, Polymarket currently gives it a 62% chance that it passes, a 63% chance that it passes. So I would say that there is a high likelihood the Trump administration again continues to beat the battle drum on this, but they are playing against the clock, because there's an extremely high likelihood that the Republicans lose the House during the midterms. And once they lose the House, the probability of any type of pro-Bitcoin legislation being passed is extremely low. I think the first thing that they'll do when they win back the House is impeach Trump. That's like the first thing that they'll do when they get back power. So I don't think they have any interest in any type of laws or legislation that would make the Trump administration look good. So anywho, let's move on to the next.
Wait. I do want to add a little bit into this. And I'll do it quickly. Again, I've said this multiple times. As much as I love the rhetoric, I'm not as bullish on anything positive really being passed. I do love the sentiment. I think making America the Bitcoin superpower of the world is a great idea. Like, I'm on board with the ideas aspect. It's the execution that is really lacking. And when I saw this clip, personally, I'm like, this is cope. I know. They're talking a good game. And we have seen some back and forth. We covered the initial kind of debacle over the stablecoin yields. And then a couple of days later, Brian Armstrong came out and said, hey, we're actually having some meaningful conversation, some compromise. Personally, it all just feels like political rhetoric. Now, one of the kind of interesting things that, like Nico pointed out, if as Bitcoiners we're waiting on the Clarity Act to pass to have some clear rules of the road or regulations that are going to be beneficial for the Bitcoin industry, it is a bit ironic that it is all being stalled on 3% yield over stablecoins when we all know that the purchasing power of the dollar is going down 10% a year. So like, what are we really talking about here? It's like, okay, the supposed good regulation that's going to help the industry is being stalled over 3% yield, but in reality, we're all losing 10% of purchasing power anyway. So even if you get the 3% yield, it's like you're still in the hole. Like, why is this the crux of the conversation, and why is this stopping it? Obviously, we know it's the big banks. They're scared of losing money, but it's still like, it's like, come on. That's probably me just being blackpilled on the whole Bitcoin and politics thing going on. Again, I do think it's a great idea. It's the execution that I'm not really excited about. I'm not really bullish on anything positive coming out of this. But again, I am one of those persons that thinks that most government laws that are passed are usually less beneficial than the official rhetoric. So that's just like my given. That's my starting point. Hence why I'm usually less bullish on stuff than Nico is when it comes out of politics. But that's my bit.
All right, everybody. Well, we still got a hell of a show lined up for you guys. I want Opti as my political quant. I want to have my.
I don't know if you want that.
I want to get signed up to that group.
The group is here. The group is in the chat.
All right, everybody. Well, we're going to be right back in just a little bit. And let's check out the news. We got a bullish video. We're going to end it up with some bull sauce because has been a little bit bleak.
Yeah, this show's bleak.
A little bit bleak. So we're going to end it up with some bull sauce. We're going to be right back in just a little bit. I want to give a shout out to our partner, HIVE Digital Technologies. Fueled by clean energy, HIVE has quadrupled its global Bitcoin mining footprint and channels that same scale into high performance compute, where their AI cloud is now ranked #1 in the world for network performance. At HIVE, you've got dual engines, Bitcoin and AI humming, roaring, accelerating in unison. They're lean and mean, they're green and clean, and they're rewriting the playbook on sustainable digital infrastructure. You can catch the latest buzz at HIVE Digital Tech or at hivedigitaltech.com. I want to give a shout out to our partner, Ledin, the leader in Bitcoin-backed loans. Unlock the liquidity in your Bitcoin without having to sell your Bitcoin. They've issued $9 billion in loans to over 10,000 customers since 2018. I absolutely love these guys. Not only do I have an account with them, but I also have a loan. And what I love about them is that there are no monthly payments, and you could pay back the loan at any time. As soon as you send your Bitcoin as collateral, you'll have cash in your account within 24 hours. Over 1,000 five-star customer reviews, and they've never lost a single dollar or sat of customer money. Go to learn.ledin.io/simply today, and you'll get 0.25% off your first loan. I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones, they don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off
anything on the store.
I want to give a shout out to our partner, BitKey. If you already self-custody your Bitcoin, you know the deal with hardware wallets by now. Complex setups, clumsy interfaces, and a seed phrase that can be lost, stolen, or forgotten. BitKey fixes that. BitKey is a multi-sig hardware wallet built by the team behind Square and Cash App. It packs a cryptographic recovery system and built-in inheritance feature into an intuitive, easy-to-use wallet with no seed phrase to sweat over. It's simple, secure, self-custody without the stress. Time named BitKey one of the best inventions of 2024. Get 20% off at bitkey.world. That's BITKEY.world with the code SIMPLY. All right, everybody, we're going to end it with some bullish news.
Wait. Can I pop in here real quick? Guys, another BitKey giveaway this week. So, go to our Twitter. All right, go.
Yeah, so we are giving away a BitKey 3 weeks in a row. Look at that. So we are giving away a BitKey. Again, this is the best Bitcoin hardware wallet on the market right now. Incredibly easy to use. Has multi-sig built in. It has inheritance built in. Whoa, what happened there? All you got to do.
Very sturdy too.
Very sturdy. And I'm apparently my laptop too, because I literally dropped it on the glass. But all you got to do to use it is you tap it, and then you tap it on your phone, and bam, bing, bam, boom, you're ready to spend your Bitcoin. And there's the BitKey app, which is awesome and fantastic. And if you use promo code simply99, simply99, you can get a BitKey for $99 instead of $150, which is pretty cool. So head over to bitkey.world today and get yourself a BitKey. bitkey.world. All right, everybody. So I told you guys that we were going to end it with some bullish sauce before we wrap up today's show. What are you laughing about?
Familia Diaz in the chat goes, Nico has such lettuce hands.
Yeah, listen. You're against Bitcoin. You're against freedom.
Wait. Remember that, Nico? That Nico was cool.
You're against Bitcoin. You're against
Dude,
freedom.
we lost them.
All right. So today's bullish news, ladies and gentlemen, is $270 billion financial advisor Rick Edelman just explained why Bitcoin is going to $500,000 per coin. The average investor doesn't own BTC. There's $7.5 trillion waiting to buy. Be prepared. So let's check out the clip. I believe it's from Altcoin Daily. Let's check it out. Here we go.
As a caveat, I want to remind everybody that this is not a straight line. We're not going to go from 70,000 to 500. It's going to be very bumpy along the way, as the past couple of months have demonstrated. Nevertheless, I am optimistic we'll get to 500,000, and here's why. It's simple arithmetic. The average investor in the world does not yet own Bitcoin. I believe that as Bitcoin continues to mature, as the crypto marketplace continues to expand, both through government holdings, through sovereign wealth funds, and institutional holdings, endowments, pension funds, hedge funds, insurance companies, banks, brokerages, etc., we will continue to see greater adoption, greater inflows into this asset class. If you look at the total value of all the world's assets, the total value of stocks on a global basis, all the bonds in the world, all the real estate in the world, real estate is 3 times bigger than the stock market. If you look at the value of gold, look at the value of all the cash in the world. There's $56 trillion of cash in all the different currencies all around the world. You add it all up, and it's about $750 about $750 trillion in total value of all of this stuff. If you take the attitude, Austin, that everybody who owns a diversified portfolio ends up owning just 1% of their portfolio in Bitcoin, that's inflows of $7.5 trillion. That, plus the current value of Bitcoin, translates to about $500,000 per coin. It's really that simple.
So, I mean, I like simple. Simple's good.
I like Big's number.
What do you think about what he said?
Well, I mean, I tend to agree. I've been saying for a while, like, you know, this is why I don't really believe in the diminishing returns meme, is because, look, guys, we all know this, and yes, it's a heuristic, but when you go out and talk to normal people, or if you do still talk to normal people, even if you talk to your friends and family, the majority of the people that we know, again, it's a heuristic, it's not perfect, but the majority of people that we know don't actually hold Bitcoin. It almost seems rarer still for us to meet people that hold Bitcoin. Yes, you start to see more people occasionally. If you're wearing like some Bitcoin merch, people will come up to you and you're like, oh, look, there's more people holding Bitcoin. We are going mainstream. Yes, the conversation around Bitcoin has increased. We are in all of the headlines, but in reality, most people have definitely heard about Bitcoin. We're starting to see the media, you know, some of the on the street conversation. So like everyone is familiar with the idea of what Bitcoin is now, but still very few people hold Bitcoin. And when you look at total wealth, you know, going a little bigger than what Rick Edelman said, when you look at total wealth, total capital, Bitcoin is still at like you know, it was 0.02 when we were at 2 trillion. Now it's what, 0.013 or something like that. It's like, there's really not that much capital in Bitcoin, which is always interesting when you realize how much attention Bitcoin actually gets. Bitcoin gets all of the attention for, you know, from our perspective for the right reasons, and from the people that don't like Bitcoin for what I would argue the wrong reasons is what we always say. They're totally afraid of Bitcoin. Because if most people use Bitcoin, then the financial world, the traditional financial system that we're familiar with, it's going to fundamentally change. And then, of course, those people in power are obviously going to lose power because money is power. And so I totally agree with this. Like, we are seeing the start of Wall Street or the institutions of the world start to dip their toe in Bitcoin. And yes, it hasn't been as good as we thought it was going to be. It hasn't even really been that much capital. And we've seen when they actually buy Bitcoin in bulk, we've seen what it does for the market. You know, Bitcoin has basically gone sideways, but when there was a huge amount of buying in what was basically a contraction year, Bitcoin still hit all-time high, and it really didn't have that much inflow. It really didn't have that much liquidity pushing it up to where it is. Like, it really didn't have that much interest. Like, we didn't have the shoe shine boy metaphorically talking about Bitcoin. You weren't getting the Ubers and they're, you know, talking about Bitcoin. I think most people got wrecked in shitcoins in 2021, and they're not back in the Bitcoin markets at all. And so I totally agree that once we see you know, even if it's 1%, like he was doing the math for, if we see 1% of total capital go into Bitcoin, like we really don't realize how much capital is in the world and how little capital it actually takes to pump Bitcoin. And yes, we're starting to see that probably the whole idea of the regulatory clarity is definitely holding back a lot of these big institutional investors or investors with capital. And maybe they bought, and, you know, to them, it's not that much, but to us, you know, they're buying tens of millions of dollars of Bitcoin. But compared to some of these asset managers' total capital, it's like literally a rounding error. It's just like, let's just throw a little bit in there just in case, you know, basically throw our pennies in there just in case this thing catches on. But once we start to get a fervor, once we do see the FOMO come back, once we do see the price of Bitcoin go up again, and people are, you know, caught up in the greed and they want to buy Bitcoin again, because look, I've said it before, I'll say it all the time. You guys hate it because, you know, 1 Bitcoin equals 1 Bitcoin. But people chase the price of Bitcoin. When the price goes up, that's when people get excited. That's when people get greedy. That's when people come back into Bitcoin. The price of Bitcoin is the best thing for the adoption of Bitcoin. Look, don't shoot the messenger. That's just how it works. When the price goes up, more people want to invest in it. A lot of Bitcoiners have called it a Veblen good, that the more expensive it gets, it doesn't actually push people away from it. It actually attracts people to it. And so I totally agree with the math of this. It's like, if 1% of total capital, well, he didn't use total capital. He used equities around 750 million. You know, $750 trillion. 1% of that $7 trillion gets into Bitcoin. It's like, that's going to take Bitcoin to the stratosphere, and it's not going to necessarily pull back if people are with conviction holding Bitcoin. So like, I think the math is very simple. It is simple math. It's just really what we are seeing. And it really reminds me of what Lynn Alden said in the beginning of the show, that what we've seen so far is that either one, people don't care about a sovereign store of wealth, or two, they just don't understand what this idea is. And this is why this is such a good opportunity for us. And me and Nico have been talking about this for a while, is like, with the institutions coming in, a lot of this inflow into the ETFs, it does seem like self-custody did kind of get put into the corner, and people, or rather maybe the more extreme, scarier idea.
Totally did. It got nuked.
Exactly. But the more scarier idea,
Colombian hitman, bro.
the worst idea here is maybe just most people don't care about it. And that's where it really is like, okay, maybe if you take this to the logical conclusion, it's not that Bitcoin fails per se because it's a bad idea. It fails on apathy, that people are either just so doomed, like you're so black-pilled, just don't care about self-sovereignty, don't care about freedom and sovereignty in general. They're just like, whatever, dude, there's no escaping this. Why should I even try? It's the apathy. It seems like people just don't care about this thing. They don't care about self-custody. They don't care about hard capped and scarcity. And maybe it is an education thing. Maybe this is a human nature thing. Who knows? But I would argue that that's what we're seeing right now, is most people just don't care. And that's why we're seeing the price of Bitcoin go where it is, which is in the dumps. But I think once the price does come back, I mean, Nico, what? It's been 5 years now since we've seen some price action. So I don't really blame most people for not getting into Bitcoin. I know when I got into Bitcoin, Bitcoin was rallying. And then after the fact, as the meme goes, you know, you come for Bitcoin for the money, but you stay for the revolution. I didn't know anything about Bitcoin. I didn't know anything about the sovereignty, scarcity aspects of Bitcoin until after I got into the market. And I had to really try to understand what this Bitcoin thing is, because it did seem like a phenomenon. It did seem like this world paradigm changing movement. And then you're like, oh, now, you know, I can pivot. And it's like the, you know, the classic meme of with the gold chains, like I'm in it for the tech, bro. But in reality, you're here for the gains. And so until we see the price start running again, and we see people start FOMOing into Bitcoin again, you know, we can cope all we want about, oh, this is the real reason for Bitcoin, you know, sovereignty, privacy, censorship resistance, all that stuff that we love. But as we've seen, the masses don't care about that. Or maybe they're just not educated enough. Maybe we've all turned our brains off. Maybe not Bitcoiners, but the majority of people have turned their brains off. And so, like, I agree with the sentiment that, yeah, once a small portion of global capital comes into Bitcoin, the math is simple and Bitcoin's going up. The flip side of that coin is like, do people care? Is it human nature for us to not really care about this stuff? Maybe it is too complicated for most people. Maybe we are overestimating people's intelligences here. Maybe we're the smart ones in the room, which is really probably the biggest black pill out of everything. If we're the smart ones here, dude, we're cooked. Like, it's over for humanity forever. So I still have some hope that I think people will wake up to this, because we, you know, maybe this is our incentives. Maybe this is my cope, because this is our business that we're here to try to get more people into Bitcoin. But it is one of those things where, like, yeah, the math is simple. A little bit of capital from global markets getting into Bitcoin, at least in a percentage term, will drive Bitcoin to crazy astronomical numbers. But we've been doing this for so long and it hasn't happened yet. And that makes you feel like, will it ever happen? So maybe it is just bear market things. Anyways, bullish in general.
100% bear market things. But enjoy it, guys. Enjoy these moments, because this is when the tourists leave. These are the most opportune moments for you to buy. Like, look, I'll put it to you this way. Have we reached full capitulation yet? I don't think so. But these moments is the equivalent of like buying Bitcoin at 22K, at 30K in the previous cycle. It's the same vibe, Same feeling. People are exhausted. People are tired. Oh, last cycle was like, oh my God, Bitcoin didn't hit 100,000. It only hit 69,000. And that same feeling comes up. And it's when people aren't paying attention. It's when people are doubting Bitcoin. It's when people are saying, oh my God, it's the FUD. Oh my God, it hasn't outperformed like gold has. It hasn't performed like, all these other assets. It hasn't performed like my expectations. It's these precise moments where people leave, the tourists leave. People don't see opportunity in Bitcoin again. I mean, you heard it from Willy Woo in the very beginning of the show. I can find alpha somewhere else, right? These are the moments when everyone thinks Bitcoin is out for the count, when everyone thinks that it's over for Bitcoin, the best gains are behind it. Those are the times historically when it's the best time to dollar cost average, because when it rips from this base. You don't want to pile into Bitcoin again 2-3 years from now when the price is at $200,000-$300,000 per coin, right? Because then when it corrects again, it's going to go back to 100,000. You'll be like, oh my God, about the top. You have to buy in these exact moments. These are the most opportune moments to get into Bitcoin, in my opinion. And what do I know? I've just I've been doing this for just a little bit. Anyways, I do want to give a shout out to, of course, one of the sponsors of the show, Bitcoin 2026. It's going to be in Las Vegas, Nevada. Some part of the Simply Bitcoin crew is going to be there. You definitely don't want to miss it. It's April 27th through the 29th at the Venetian Hotel in Las Vegas. If you use promo code SIMPLY, again, promo code SIMPLY, you get 10% off your tickets to Bitcoin 2026. I call it the Bitcoin Super Bowl weekend. It is the biggest Bitcoin celebration of the year. You definitely do not want to miss it. Go to Bitcoin 2026 in Las Vegas, Nevada at the Venetian Hotel. Use promo code SIMPLY to get 10% off your tickets. And of course, the Simply Bitcoin crew will be there. Again, go to Bitcoin 2026. Scan the QR code on your screen or check the link in the video description, and we'll see you guys at the Las Vegas conference. All right, everybody. I do want to thank everybody for tuning in. If you guys enjoyed the show, you know what to do. Smash the like button. Consider subscribing to Simply Bitcoin Live. Help us get through the bear market. It is going to be it is going to be a little bit brutal.
Yeah, someone said we're probably going to need new jobs soon.
Let's see.
Honestly, it might be true.
Let's see. Help us get through the bear market. And again, if you guys enjoyed the show, you know what to do. Smash the like button. Consider subscribing. And again, we'll be back tomorrow for a brand new episode of Simply Bitcoin Live. Until then, take care, everybody.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.